Hey everybody, Preston Brent here with our Trader User Group, a weekly roundup. This is for the trading week ending July 24th, 2015. What I've got on the screen here is the E-mini S&P 500 futures, and you can see, and if I just block off the year, you can see just we've kind of been really not going anywhere for the entire year. We've had a really very sideways market. Now it's been an interesting trade because basically been trading sideways all year long. But this is essentially kind of where we've been for the year right here. Okay. Um, and when you step out, it really doesn't show much. You can see though that we've had a number of attempts at trying to penetrate the all-time highs at 2134, but we just can't get up there. And you can also see, as I've been pointing out to a lot of our members, we've just had a lot of bearish divergence that's just constantly suggesting the markets are getting weak. So it really does showcase um, just where we are right now. A lot of new money is not coming into the markets at these levels. In fact, when we do hit these levels, the bears are winning out and they're pushing the markets down. And don't look for you can always find a reason why the markets go down after the fact, but what you need to do is this is the side of the chart we trade, and we need to base it on the movement on this side of the chart right here. So what I'm looking at here is, again, just more chop. And unless we take out these key points right here, then that's pretty much where we're going to be. And when you think about it, this is where we're located right now. So not quite in the middle of the trading range for the year, but that's close, right, on where we've been. So now the other thing I want to do is if I just come in here and put a Fibonacci on a couple of key points here, and obviously the first one that's going to come to mind is this movement that we've had off of these recent pivot lows that we made right around early part of July the 6th, and then we've just had this huge fast up movement, and then this, we've been making essentially we've been moving from the peak in July 20. Over the past 5 days we've been moving down. 4 days in a row we've actually had down days. So I would come in here and put a Fibonacci on here, but before I do this, let's take it out a notch and let's look at a monthly chart. Now I've shown this before, but I want to show you. I put some Fibonacci's on the monthly chart, and you can see on this monthly chart right here these Fibonacci's and how they come into play. And what I've done here on the futures, S&P 500 futures, is from the low of March 6, 2009 to the highs here of roughly about 2137, give or take a little bit here. So let me just get that up there perfectly for you so that I know exactly what the high was. I believe the high was at 2134. So if we just come in here and let's just put in 2134 so we get an exact number on it, right? So let's just put in here 2134 and then we'll close it down. So now in looking at the Fibonacci, you can see here that a normal, and let me emphasize the word normal, a normal pullback would take us down to 1789, right? So call it 1780, what roughly, right in that area right there. And that would represent a pullback of about 23.6%. Now, I like using that number. There are others that'll use a 27%, but 23.6 is a pretty good number because in a strong market, that's a common pullback point. And then in a moderately strong market, 38% fib is a pullback. And then anything at 50%, not on a monthly basis, but on a weekly or but clearly a daily basis, 50% is a very common pullback. Once you start going beyond the 61% fib pullback on a daily chart, you're going to start getting into a lot of distribution rather than profit taking. And then the uptrend is damaged. So in looking at this chart here on the monthly basis, right in this area here would be a clear area of possible pullback. Okay, Now, I find it interesting that if I were to extend this line, the highs in 2007 were sitting right around the 38% fib node, all right? So wouldn't be surprised if we get very ugly to have a pullback like that. But taking us down, let's say to 1780 is a or make it 1790 roughly. Let's make it 1790. So a 1790 pullback from 2134 from 1790 gives us about a 344 point move, as you can see right there. All right, and then if we take that as a percentage of 2134, you know, that's about a 16% pullback. And that to me would be a good area for bulls to step back in again. But that I would love to see that, quite frankly, because then that would add a lot more strength and actually give this bull market some more longevity to go much higher. But until we have some sort of pullback, and I don't mean a 2% pullback, we haven't seen anything yet, but a nice little pullback, we're going to have this very choppy environment at this altitude that we're at right now. Now you can see that long monthly bar down like that. That was done in October of 2014. We almost came down and hit that area right there, but that's where I think we're going to have some very firm support, and I do hope we get some sort of pullback like that. It would be good. Now, if I take this, I'm going to leave this Fibonacci on the chart here, and then I'm going to take it back down again to a daily basis. And now you can see on the daily basis there was that highs, and these all-time highs were made on uh, May the 19th, and then we've just had this very choppy mode. We almost got back up there again on the 20th of July, but then we just gave it all back up again. So these constant fail rates are not good. But let's zoom in a little bit just to look at a little bit more of a near term. And we're going to look at the daily plus a 2-hour chart, which most of my members know it's a great one to use. So if we look at this, let's put another Fibonacci on this low point to the high right here and just kind of see where we're sitting right now and see if any of this makes sense. So I'm going to come in here and then just put it on the low and run it up to the top right here. And you can see that we came right down to that 61% fib level here. All right. Right down in that area there, we bounced off of it and we're sitting right here. So if you remember what I said, if we take out that fib level, then this is going to be, it's going to negate all of this up move right here. And then we'll probably come down and test this 2034, or actually it's the actual numbers 2032. So we're going to watch this number very closely here, roughly call it 2070, 2069, because we came right down to that. And then we had a little bit of a bounce as we went into close on Friday. But that's kind of what I'm looking at right now. The other thing that I pointed out to our members, if we just want to kind of zoom in a little bit, and let me just take this back off the screen. And then I'm going to come in here and I'm going to put on a trend line that we were running to the downside. So if we look at this and we just kind of put this trend line in like that, right? And then let's say I dupe it, and let's just see here like that. So we're going to dupe the trend line, and then we're going to move it down just like that, right down at the bottom off of these guys right there. There we go. So that's the that's the trend line that we're in. And this was a valid channel rather until we broke out right there. Now it could be a false breakout. If it is a false breakout, we're going to know soon enough, because like I said, that is the 61% fib pullback point right there. If we take that out, then we're probably going to go down, test the 200 EMA, and then probably come down and test this 2032 area right here. All right, so that is going to be something that can happen literally very quickly in a day. It could make that in a day very easy. We've also got some support sitting right at that area right there, which is by all circumstances the same, believe it or not, is right in that area there. So this is a big support point. It held up there, 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 and right there for a few days. So we take this out right there. I don't think the 200 is going to hold, quite frankly. And then boom, we're going to come down and test this again. If we take that out, then you're going to see some acceleration to the downside and then a possible retest back up to this line, and then we'll have a moment of truth on that retest. If it fails, we're going to come back down and take out that prior pivot low, and we're going to keep right on going down, doing retest down, and that'll give us a new channel to the downside. And that would then take essentially this channel and shift it south. All right, so a lot of stuff going on here right now. And I went through it fairly quickly, but that's what I'm looking at. That's what our members are focused on. And we've been we entered some shorts and we got into this short position just after we had a false breakout here and we took out the 50 EMA. So that's kind of where we're sitting on the S&P 500 E-mini futures. Now, if I were to add in all my other indicators in here, let me just take this off the screen here. And then I'm going to add in my other indicators. And there they are right there, right? So these are what I just showed you, but I've got some other things in here. You can see the 200 EMA is sitting almost right at the opening for 2015 of 2055. That was the opening price. So it'll serve as some support, but you can see all of these various support elements down here that we're going to be watching very, very closely. And just a tip, I recommend you use the 2-hour chart as a really good 2-day to 7-day tool to help you determine near-term direction, okay? And if you look at this 2-hour chart right here, you can see, quite frankly, that we have, we're making lower highs and lower lows right here. And in fact, this lower low right here, down in that area there, again, we're going in the same direction. So that's going to suggest if we have a retest up here on Monday with a little bit of a build, seller's going to be looking to come in and sell it and take it back down. Every uptick on Friday was met with selling, okay? So right now we're a sell the rally mode. And I'll tell our members and send a little note out when we get outside of the sell the rally and turn into a buy on the dip. All right, and it's very important you know the difference, otherwise you could just lose more money. And if for those of you holding stocks, maybe you've got hedges with them with long puts on the underlying security on the stock, but you want to know, gee, do I add to my stock position? I'm hedged, so I'm not too worried about the downside, but do I take advantage of a reduced cost basis in the stock to pick up some more shares to reduce my cost basis? Well, again, this is a buy on the dip versus a sell the rally mode. Right now we're in the sell the rally mode, so it can go lower. So that's where we're going to sit. If I come back to the daily chart here and let's go look at the Dow, which has been totally decimated. If we look at the Dow futures, we'll look at that. And on the daily chart here, let me just get this up on the screen here. Let me just see what is interesting. Let's see here. Here we go. All right, so here is the Dow futures. On the Dow futures, you can see we blew through not only the 50 EMA, but the 200 EMA, and we're sitting at a key point right now at 17,465. Okay. And on the Dow futures, you can see the opening price for the year. So right now we are red year to date on the Dow futures. Dow's been weak all year, as has industrials, as has been the transportation sector. I've said that unless the Dow Jones transports really start to come through for us, then it's going to start to drag the Dow down, which it's been doing since the middle of May. And because the Dow transports are dragging everything down, and then once the Dow continues to falter, then it's going to start dragging down all the other stocks. So they just start falling like chips. And right now we're sitting at this key pivot point right there. If we take that out, we got one little final hurdle, right around 17,350. And we take that out, then we're off to the races. So we're near some key points right now in a number of different indexes. If we look at the Russell also had a bad day. You can see here on the rut, we came down just slightly north of the 200 EMA, right? Here's the yellow line. The 200 EMA is at 1217. We closed at 1223. So just slightly north. You can see the shaded zone here from 1220 down to 1203. 1203 being the opening price for the rut futures for the year. All right. So we're way off of this. This is a total fail right here. Total fail. So again, the momentum is down. If we look at NASDAQ futures, which is held up better than most, right? NASDAQ futures, let's just put this on the screen. You can see the NASDAQ futures. We are in our support zone right here. This is a key support zone for NASDAQ. You can see right in that area there was resistance right there, right, until we finally blew through it right there. But we just did not get, we shot up, made the all-time highs in the NASDAQ 100 futures of 46.86, and then we're right back down here again, okay? And the odds suggest that we're going to come down and test this area right here at 44.83, all right? In fact, on NASDAQ, I think it was more overextended, and it was certainly due for a bigger pullback. And we were looking at pairs trades on the NASDAQ and the Dow. But if I were to blow this up, you can see right here, we had a very big bearish divergence bar. You can see the high of that bar and the low of that bar took out that bar, and it took out that bar right there, these two previous bars. So that's a tremendous bearish divergence bar. Typically, when you get a big bar like that, the high and the low, you'll generally go back up to about the 50 to 60% extension off the lows, and then you're going to run into some trouble, and then you're going to roll back down again and then pick up the trend like that. So we're going to be watching that come Monday as well. So these are just some of the key attributes that we're watching in the market. Now we're doing the same thing in currencies with the dollar and the euro. We're doing the same thing in gold and silver in the metals market. We got some interesting plays coming up there. And we're doing the same thing in oil and energy. We've been short oil for a while. Our members are doing very well in that one. There's some really cool things coming up there as well. So for our members, we got a session tomorrow night, Sunday night, for a weekly market watch. If you're a non-member, I highly encourage you to come on in and check us out. Got a lot of things going on, and we're outperforming the market by a good margin this year. So come on in, see what we're all about. Otherwise, members, I'll see you Sunday night in our weekly market watch. Have a good one, everybody. Ciao.